Hello traders, this is Mario Sacinodoro from FinMarket. Welcome to our webinar, Bill Williams, Alligator and Fractals Forex Strategy. This is going to be a rules and application presentation, so stay tuned to start with this amazing indicator created by legendary Bill Williams. Before we continue though, we'd like you to read our disclaimer. Please make sure that you understand what is stated here. Mainly, we're saying that materials and analysis and opinions that are coming towards to you from me are only for education purpose and not to be interpreted as a investment advice by our company FinMarket. Please make sure that you understand that past performance is not a reliable indicator for future results. Now, trading leverage carries a high risk, and you have to be very, very careful when you are trying to trade with these instruments. Now, to continue forward, let me give you a hint who I am. My name is Mario Sacinodoro. I am the Chief Market Strategist here in FinMarket. I basically started trading back in 2012. Now, during the time, I studied trading analysis and trading psychology, which is one of my specialties. I have attended more than 30 motivation and psychology seminars. Now, I began to coach people back in 2014, and I was trading my own account too. Now, during the economic recession, I developed some EAs, some algorithms that helped me with my trading, and that assist me to get into the group of some people in Wall Street, so I could assist them with their algorithmic testing and form some strategies of my own to present to these people, which they were the premium strategies in Wall Street. Now, my market approach is based on price action, basically, and market psychology. I have been featured in the Yahoo Finance, FX Street, Nasdaq, FX Empire, Finance Magnates, and more. My main reason why I do this presentation is because here in our company, in FinMarket, we are have a respect for our clients. We need them to be educated. We want them to be educated, and we want them to succeed. So we're gonna try and give you some information regarding to this indicator from Bill Williams. Now let's start. Now, mainly, Bill Williams was a legendary trader and was one of the early pioneers in market psychology. He created something called trading with market chaos. It's been more than 30 years in the game. It's an amazing tutor. I personally got some of his lessons and his webinars, and it was great. I too like to implement some of the strategies I'm going to show you. It's something that is generally known that Bill Williams considered to be one of the greatest in our field. Now, mainly traders should think about the chaos, something that it's something that you can basically structure it in a sense that you can take advantage of some of the opportunities it's giving you in the market. Mainly, Williams states that the chaos and the markets are connected. So he believes that there is some kind of randomness in the market, but this thing can be also get approached by some methodologies. Now, the markets basically according to Bill Williams, it follows the path of least resistance, like a river when it's going down to the stream. This is how he's interpreted the way that the market is acting through a period of time. Now, in addition to that, traders are goal mainly, according to Bill Williams, is to combine the knowledge of the market structure with self-knowledge, meaning that they're trying to compare their knowledge with the market structure. Now, Bill Williams gives his approach a name for that, and it's called profitability. This is not by mistake, because he knows how to apply his own knowledge to get the structure from the market and applied it in a way that makes sense to him. This is what we're going to try to give you, the informations that are going to be internalized by you and being applied by you, so you can make sense of how markets are probably going to continue or going to become like a sideways market. Now, the key here is the sideways market. Bill Williams stating that in order for us to be in a degree profitable in this market, we need to make sure that we not include trades that are stuck in a range market. This is according to Bill Williams. Okay, so his indicators basically are going to help us avoid the sideways market, because he believes that when the sideways markets are in due, there is no opportunity whatsoever. So stay with us. We're going to show you how to avoid the turbulence. At least we're going to try show you how to avoid this turbulence from the indicators that Bill Williams developed for us. Now, this indicator is considered to be as one of the most useful indicators in the industry, according to general knowledge. It is a user-friendly, okay? It's a trend-following indicator and helps traders to pay attention to a sideways market, like we said before. Now, trend-following, you have to make sure that you understand what that is. Trend-following means that these indicators will try to follow the trend and will try to give you hints to stay out of the sideways market. Okay, that will help you also psychologically to be prepared when you see the sideways market comes to you, and to be avoided. Okay, so now with this indicator, basically you're gonna have at least a small piece of information that are going to help you to stay out of some specific trades. So you're gonna know which one are going to be tradable for you, okay, according to your trading plan. Now, it is a user-friendly. That doesn't mean that it's easy, okay? It is very easy to follow, but it's hard to stay focused if you don't have your mindset in place and your psychology be incorporated to this amazing world of Forex. So I'm gonna give you some hints how you can trade with a mindset at least of the more professional way, okay? Bill Williams created a set of indicators that include the popular fractals, okay? Fractals of their own, there are some of they are one of the reasons that most of professional traders use Bill Williams methodology. In this webinar, however, we're gonna explore the indicators that may assist you to write the potential trend. We're gonna skip some of them, okay, because we don't want from the start to make this webinar too complicated. It's gonna be easy, okay? It's gonna be very easy for you to follow. Now, the objectives are going to be to learn about the fractals. What is this alligator? Okay, it's not an animal, it's an indicator, guys. So yeah, how to trade with alligator, combine fractals with alligator, some support and resistance examples, how to avoid the sideways market. This is going to be on the example section as well. Some profit target, stop losses. This is very subjective. It has to do only with some specific levels that we might watch, and some rules of entries that basically is structured on a specific way to enter the market. So the next one is how to is how to know which of the indicators to use, and one of them is to understand how Bill Williams dimensions work. Basically, Bill Williams combined the chaos theory with the trading psychology. Okay, in order for him to do that, he needed to develop some indicators, which including some trading patterns and fractals. Now, chaos theory states that there is chaos in the market, but also with its correct mindset and a set of rules, you can harness this chaos and have an ability to make sense. Now, some of these indicators that Bill Williams created are the accelerator, decelerator, oscillator, alligator, awesome oscillator, fractals, gator oscillator, and market facilitation. The most important ones are the ones that we are going to show you today. And in order for you to fully understand what Bill Williams has made, you need to grasp the concept of dimensions, meaning that you have to understand that the market has dimensions, okay? Different level of dimensions with different abilities. So in order for you to understand what this is all about, you need to open your mind to a set of indicators that capture a set of dimensions, okay, with different abilities, different advantages and different disadvantages. The one that we're going to show you today, though, is the ones that are going to be the most easily implemented and the ones that make more sense from a novice trader up to intermediate. Now, dimensions. We have fractals, which is the phase space, the zones, the phase energy force, the combination. You don't need to know exactly what that means. I'm going to try and explain you, but you don't need it, okay? The momentum is the phase energy, decelerator, accelerator, phase force, and balance line, which is the attractors. Basically, what you want to make your focus on is going to be the fractal, which is the phase space, which is give us the phase of the market's reaction, the momentum. The balance line, not so much. So we're going to focus on the fractal and on the momentum. Momentum, we can use our alligator to take advantage of the momentum phase. The fractal is the one that I'm going to explain you what that is in the next one. So fractals are, let's say, arrows that are on the top or below of the candles on the chart. These fractals are formed mainly when 5 repeated bars or candlesticks align differently. They have some sets of formations that when these fractals are in line with these formations, they give us some degree of a small trend reversal. Okay, so in essence, you have your trend, and then you have small trends inside the trends, and when the reversal occurs, according to Bill Williams, we're gonna have potentially market reversal in some degree. Okay, I'm gonna show you on the chart and you're gonna understand what I mean. We need the 5th bar though to close and know the highest high or highest low. You can find the fractals on your MT4 and they are free. You don't need to buy anything regarding to that. Let me show you how it looks on a chart. Basically, these are the fractals. This is upper fractal, those are the lowest fractal, okay? What is mainly said out there, according to Bill Williams, when a fractal is formed, then we might experience some kind of reversal. For example, these intermediate fractals here, when they are broken, so if we draw a resistant line, okay, and if the market reacts to that, we might have an explosion of the price. This is according to Bill Williams. Now, here you can see a fractal is formed here, so no other one is lower than this, okay? And then we have an upper fractal, which has been broken by this huge candlestick, and then the trend continue to go upwards, mainly is it's considered to be like a support or resistance. Okay, this kind of fractals we could say that are some kind of resistance and this as a support. And you can see this pattern being mostly repeated. We have the fractals here ending, then you have your breakout from the huge candle again here. Okay, so mainly fractals are going to help us with the set of the indicators that we're going to examine next. Now, the alligator. This indicator is basically includes three smooth moving averages, okay, set at 5, 8, and 13 period, and that is very important because those are Fibonacci numbers. If you don't know what Fibonacci numbers are, you make a quick Google search. When you finish, you're gonna understand that Fibonacci was Italian mathematician, which had created some sequence of number and applied it to different areas in the find it in the different areas in the nature in the markets basically later on, which we can use to find a reversal point. Now, Fibonacci number in connection with the alligator is considered to be a very powerful combination. Now, the initial smooth average is calculated with a simple moving average SMA, adding additional smooth average that slow down indicator 10. Basically, you're gonna see that you're gonna have less of tremulous in our indicator here because has some different calculations that Bill Williams created for that sense. Okay, now the alligator, as states, consists, according to Bill Williams, with three moving average that he called them the jaw, the teeth, and the lips. Okay, now why he did that is to mainly try to describe the alligator indicator as a real alligator, okay, that the animal one. So he said that he has a jaw, a teeth, and a lips, and when the alligator opened his mouth, he tried to eat the prize. This is what he said. Okay, so when their mouth is open, you chasing the market, you normally have a trend according to Bill Williams, and these reactions are mainly have some ranges. Okay, the alligator jaw, the blue line, it's in the 13th period of smooth moving average, moving into the future according to him by 8 bars, meaning that the line is plotted 8 bars to the future according to Bill Williams. Okay, so this his calculation have some kind of 8 bars prediction according to him. Now the alligator, the teeth one, the red line, it has 8 period. Okay, it moves 5 bars into the future. And alligator lips, the green line, has 5 periods of moving average and move 3 bars into the future. Let me show you how we incorporate the alligator into our charts. This is basically the indicator, okay, with the fractals. As you can see here, the indicator is opening his mouth, like he said, okay, right? Open his mouth, chasing the market, and then when he closes his jaw, his teeth, and his lips, the market retraces. This is initially what Bill Williams said. Okay, we're gonna combine some other things with that, so we can find more easier for us to understand what is happening. But for now, you can see that when the market is reacting and the alligator opening his mouth is like chasing the price. Sorry, and when the mouth is closed, in essence, the market reacts on a different way. So then it's closing the mouth and then open again. You see, it's open and you have a reaction in the market. Now, when we said that we're gonna find out how to mainly avoid the sideways markets, it's when the indicator is intertwining together. Okay, so when the indicator is like a mess, like macaroni, okay, you can see that the market is not going anywhere according to Bill Williams again. You can see that it's forming basically some kind of support and resistance. And here is where the fractals are also very helpful, because when the fractal is broken, you can see that the alligator here open his mouth again and you have a reaction. Okay, so you need to avoid this area according to Bill Williams, because it's a very dangerous area for a trader to be in. All of this is according to his strategy and how he's applied it to the market. Again, here you have the indicator, the exploding price. Okay, you can use, for example, the fractals to get in or get out. All right, then the market reacts, the mouth is completely open, we're following the mouth, then the market get into a range. We can see from our indicator that the market is in a range right now, so we tend to avoid these areas. Like we said before, again, resistance and support is being formed. Fractals not be broken here, so we wait. Okay, so mainly the strategy states that when there is a trend in the market, we go for it. This is what he said. When the market is on sideways and we see our indicator become like this, then we tend to avoid it. Now, guys, let's go for an example section. I want you to see how we mainly incorporated in our MetaTrader. All right, so this is mainly the setup that I'm using. As you can see, we have the awesome oscillator. This is an oscillator, again, which you have it on your MT forum, which is being provided free. When you go here to your navigator window, let me close this thing and show you exactly how to implement this amazing indicator. First, in order for you to put all the indicators that I have here, you need to go to the navigator. And here in the indicator section, you can press the plus button. Then you go down to Bill Williams. It's going to be like that. Okay. Then you go first for the alligator. You drag it on your computer, on your charts. You don't change anything. If you want to make the lines a little bit thicker than I am, you can do it by here. But the parameters needs to be exact. Okay, don't change them according to the strategy of Bill Williams. Bill Williams stating that this has to be exactly as default. Okay, so that's the alligator. Let's go to the fractals. Fractals more easy. You go drag them again. You can change the color here. You don't need to do anything. Press OK. There you go. You have your fractals. And the awesome oscillator, which I'm going to show you now. Again, don't do anything. Just change your lines if you want here to be more thick, and there you have it. Now, the awesome oscillator is basically an oscillator that's stating, we can say, as a momentum indicator. Okay, you can use it to find areas of divergence, meaning that when the market is actually going higher and the oscillator is going lower, like this section here, let me show you, is mainly stating that we might have a reversal of the market of a degree. Okay, so from here to here, you can see that the market is going up, but in essence, our oscillator is going down. Okay, this is the divergence. This is how you call it. It's the divergence of the price between the price and the oscillator. And true enough, the market, according to this now, it reacted to that. Okay, you can see it. I mean, it broke the fractals initially. Let me zoom in for you to know exactly what I said. Divergence, higher highs, high lows, lows. Okay, this is the divergence. Let me take the lines here for you to see it a little bit better. Give me a second. All right, so this is the divergence. Okay, the divergence stating a reversal in the market according to Bill Williams. Okay, there are many oscillators there that are stating the same thing. So the divergence here is it's true, it's become a reversal of the market in some degree. And you see it, the first thing that happened mainly is the fractal broken. All right, so the fractal has been broken from here, and you see the downwards movement. Of course, the market then reverse. Doesn't mean that the divergence is going to be holding forever, but it's an indication, at least according to Bill Williams, that is something that you should be watching. Okay, so that's an application with the awesome oscillator that can be, I think, helpful for you to understand. Okay, now let me go back. Let me show you a trend here. Okay, and how beautifully this indicator is applied. Now we have here, let's say that the trend stopped here. First, you could see that we might, the awesome oscillator started to fade out from this moment, or from this, you can see it, but let's be fair, let's take it a little bit later. All right, little bit later. You see here mainly is the awesome oscillator state that now we are going on the negative side. Okay, on the negative side, we have the negative side here. Also, we have a divergence in price here. You see the divergence, all right? Divergence first, oscillator state a negative indication here, and broken fractal, boom, here. And at the same time, guys, let me show you. If you are careful, you're gonna understand what I'm saying. Here, there was an opening, a start of open, the let me change the color because it's not visible. Here you can see that our alligator started to open its mouth. All right, so divergence, oscillator stating that we are on a negative momentum according to Bill Williams, of course. Alligator open its mouth aggressively. The price moves lower, so one could probably consider a downward movement after the fractals. Okay, maybe he could consider also some kind of exit of the market above some of these fractals, maybe according to its to his or her trading plan. Then you will see that the price continue going downwards, following the alligator. The alligator then rests a little bit here, but the price doesn't want to go back. So the alligator opens his mouth again because he needs more food. So there you go, down. And then, guys, you obviously could see here that our alligator stopped here, open his mouth on the opposite side. You will see that here you have mainly your higher highs, and here you have your oscillator stating a positive momentum, at least for now. You have a break of fractals somewhere here, boom, with force. You see how powerful these fractals are, according, of course, from Bill Williams. Boom, you see the price exploding to the other side again, because you see that some of the rules of engagement have been applied here, except the divergence. Okay, divergence is not always going to be applied, but it's something that you have to consider, I think, as an extra confirmation. So yes, going up, the alligator continued to have his mouth open, chasing the price again, and then, guys, you get into what? A sideways market. You see? Let me change the line here. The sideways market that we are stating that is, according to Bill Williams, needed to be avoided according to the mentor. Okay, so Bill Williams stating that, okay, you have your chance here. You don't need to go into this. I mean, one example that he says, and I really like it because he's mainly describing exactly what he actually said before. It's when you have a car, okay, a convertible car, and you see the weather cloudy, okay, you don't go with your roof down. I mean, you know what's happening, what's going to happen, what is coming. You prefer to open your sunroof or your roof of your car when there is no clouds in the sky. So this is actually what he said. Okay, so it makes sense. When you see sunny days like this, okay, you just ride the trend. You don't need to go into clouded days like that, okay, because it's gonna get you in trouble. I mean, getting into this psychology chaos is gonna break your psychology. And believe me, when your emotion kicked in, your technical analysis go out of the window. So you want to go with the least resistance, okay, like Bill Williams says. Try to get into the market with the least resistance. Emotionally, psychology, technically, you need to be in the least resistance in order for your mindset to be okay and to be active and to incorporate and taking the information from the market with objective manner. Because if you have your emotions kicked in, you don't going to get information from the market objectively. You're just going to get random feelings kicking into your head and trying to figure out what's going on. But in essence, it's not technical analysis. It's sentimental mess. So you need, according to Bill Williams, to be on the least resistant side for you to make objective decisions when you're trading. So here, closing his mouth. Also, guys, preliminary indication that something's changing. Again, divergence. You see, bam, divergence. Exactly. I mean, this is not exact science, guys, but it's something that if you can notice it, if you are experiencing, you can notice these things, you may get some hints of some reversal indication of something that is changing in the market, which before was different. Okay, for example, here, higher highs, higher lows. I mean, this is obviously lower than this, meaning we have clearly divergence. Divergence states that there might be a weakness in the market, okay? And because our oscillator here, it's a little bit lacking, maybe that's why you see this thing happening here, okay? So oscillator with main alligator, according to Bill Williams, works great. Now, again, divergence, sideways markets. Now, let's go to this breakout here. Okay, the market cannot stay in a range for many years or weeks or something. Has to mainly take the pressure out. And our friend here, Bill Williams, said that when you broke the fractal, when you are below our friend indicator here, alligator, when our mouth is open, according to Bill Williams, then you may have a trend to the downside. Of course, here is not a trend. It is a parabolic move, but makes sense again. We don't mind taking this thing here. Again, negative oscillator, okay? You have your breakouts here. You are below the indicator, okay? Our mouth is open, and there you have it, okay? Another example that our alligator mainly in this case work. Of course, there are sometimes that our alligator doesn't work, like here. It's open his mouth and then it reverses, so you might consider that it's a losing trade because you might fear the market you got out, even though eventually the market continued with the initial move of its friend alligator here. Okay, another good opportunity was here. Now let me give you something like an addition, like a bonus. We don't normally do that, but because we really like our clients here, and we consider you to be our building stone, we need you to be happy and successful. So we want you to mainly have all the information that are available there. We want you to have it. So let me show you something that maybe will help you while you are doing your research on the chart. Again, this is something that Bill Williams used because obviously Fibonacci, like we said before, it's incorporated in the Alligator. So what better thing to do is to actually use the tool, Fibonacci tool, for the retracement. Okay, so let's take these downward moves. Yeah, I'm not going to explain Fibonacci now. I'm just going to put the indicator here randomly to see that even with the random placement of the Fibonacci retracement, you see that here the price actually bounce, all right, here, bounce between the Alligator and the Fibonacci retracement of the 23 degree here, okay, and then went downwards. Okay, now if I move that to the downside, I'm sure that I'm gonna find another level. Yeah, there you have it, almost here bounce again, 38% here. You see it? I mean, even though we do it randomly, you can find areas of reversal with the help of the Fibonacci retracement. I mean, this is obviously general knowledge. Again, it's a tool that we all technical analysts, most of our technical analysts use, and I want you to put in perspective all the things that we talked about before, and let's do it here. Let's take the Fibonacci retracement from here. Let's say that the move ends here. Now we know that it broke down, okay, our fractals. We want the price to go down, obviously, but the price reversed a little bit. Okay, it reversed, yes, of course, but when it hit, where it hit basically the 61.8%. 61.8%, guys, is considered to be the golden ratio of Fibonacci on the retracement, meaning that when normally hits that level, we consider that level to be strong. Okay, so yes, I mean, it makes sense. Bam, reversal, you wait for it, then go down again. There you have it. You have your divergence, you have your fractal breakout, you have your alligator open up, you have the 61.8% of the Fibonacci ratio, and you have the negative momentum from your oscillator. Okay, so if you want to be a little bit more knowledgeable in the market, you need to understand how the market works and how act, at least on the technical side. I'm not going to talk about the fundamental side. That is going to be another session that we're going to make, another one. There are going to be a lot. Okay, the fundamental side is completely different. But before we close, guys, because we have some time, I want you to mainly understand a little bit about trading psychology. So trading psychology, it is the fundamental tool, okay, for someone to act in the market at least with some degree of success. Okay, so in order for you to be more knowledgeable, to have more control of your emotions, you need to fix your psychology. Okay, we're gonna do a psychology session in June, but for now, let's say that on the positive side of getting more knowledge into your mind, okay, you need to know that in essence you're just trading others people perspective. Okay, so if you in essence trading others people perspective, okay, that makes the market psychology one of the most important things that you should consider. All right, because this is a mind game. It is a mind game. Okay, you are against other traders, meaning that you are against the market. Okay, so there are going to be some winners and some losers, all right, probably. So how you act in a time of uncertainty, how do you act in a time of a losing stream, how do you act in a time of a winning stream, how the traders, the professional traders think and act, and how the non-professional ones think and act. You got to make that difference. All of these things are going to be covered in a later session that we're gonna do. All right. But for now, think about the market like an objective tool, which gives you all the information you can absorb, okay? But it's the way you absorb the information that makes the difference, all right? That's why there is an example when Bill Williams was doing his sessions. He asked basically he asked the crowd over there, how do you think the market it is for real? Meaning, describe the market. If you could describe the market as an animal, okay, which animal do you think it's gonna be? So you have this guy comes up and say, okay, I think it's a shark. The other one said, okay, I think it's a bear because of the aggressiveness. Others said, it's a wolf, he's chasing me to eat me. And there is one, this guy said, okay, it reminds me of my wife. All right, okay, whatever. Okay, anyone can think the market differently, but most of these guys, I mean 90%, not saying 100%, 90% of these guys thought that the market was trying to kill them. And that is not the objective way of you to incorporate the information that the market gives you. You need to be objective. You need to don't expect nothing from the market. You need to not think the market is gonna eat you alive, but take the information that is giving you, like the ones that I show you, divergence, breakouts, fractals, alligators open his mouth, Fibonacci retracement. All of these informations are just informations that you incorporated with the positive side of things. We don't need to have negative thoughts from market, neither positive, because there are none of these emotions applied into the market if you want to be objective, okay? So in essence, try to at least suppress some of your feelings. Try to have your mindset in a state that only receives information from the market and nothing more, and just do your research and use your tools to make sense for you to have some degree of success. Now, mainly that was it, guys. That was our webinar for the day. I would like to thank you very much for attending our webinar. This webinar will be recorded, so you can obviously ask for it. It's going to be available in follow days. I really thank you for your attention. Have in mind that we are here to answer your questions. Everybody here works all around the clock because we want you to be to have some degree of success. We want you to be happy with us. Our staff is highly trained. Please make sure that they can answer your question, and stay safe and be productive, guys. Thank you very much and see you soon. Thank you. Bye.